Hello everyone and welcome back to our channel Brilliant Bankers. Today we have an important topic lined up for all the aspiring banking professionals out there. We will be dwelling into the roles of the key institutions that shape the landscape of foreign trade in India, understanding the functions of Exim Bank, the Reserve Bank of India, the Foreign Exchange Management Act, and FEDAI, the Foreign Exchange Dealers Association of India, is not only crucial for your CAIIB exams but also for gaining a comprehensive grasp of the financial sector. So, if you are preparing for CIB or simply eager to expand your knowledge in the realm of the international trade, you are in the right place. Let's dive into the dynamic roles of Exim Bank, RBI, FEMA, and FEDAI in shaping the foreign trade scenario. But before we start, make sure to hit that subscribe button and ring the notification bell so that you never miss on to our informative content. All right, let's jump into it. Finally, today we dwell into the vital institution that plays a crucial role in bolstering India's international trade, the Export-Import Bank of India, or Exim Bank. Established in 1982, this financial powerhouse has been the instrumental in fostering economic growth through its diverse range of products, services, and facilities. In this video, we will explore the pivotal role of Exim Bank and its significant contribution to India's global trade endeavors. Coming to the role of Exim Bank. Exim Bank, the Export-Import Bank, serves as the premier export finance institution in India, mandated with the task of promoting and supporting the country's foreign trade. Its primary role is to facilitate and finance Indian exports and imports, thereby contributing to the nation's economic development. It was established in 1981 under the Exim Bank Act of India. It's Exim Bank of India Act 1981, which is wholly owned by Government of India and was started for providing financial assistance and services. It serves as a growth engine for industries and SMEs by providing a wide range of products and services. So, what are the functions of a Exim Bank? Exim Bank performs several critical functions to fulfill its mandate. By financing of export and import transactions, it provides financial assistance to exporters and importers through a variety of credit instruments, including loans, guarantees, and credit lines. By promotion of cross-border trade, Exim Bank actively promotes bilateral and multilateral trade agreements and collaborations to expand India's presence in global markets. By facilitation of project exports, Exim Bank facilitates the project exports by providing financial support and advisory services to Indian companies involved in overseas projects. It also helps in providing selective production, marketing, and financing for Indian products to make them internationally competitive. So, what are the products that are being given by the Exim Bank? Exim Bank offers a wide array of financial products tailored to cater to the diverse need of exporters, importers, and other stakeholders also in the international trade arena. These include the buyer's credit or the export credit. Exim Bank provides export credit in various forms such as pre-shipment credit, post-shipment credit, and buyer's credit to ensure that the exporters have access to necessary funds at the competitive rates. Corporate banking. Exim Bank offers various finance products to corporates like the R&D finance for export-oriented units, pre-shipment or post-shipment credit program, lending program for export-oriented units, import finance programs, production equipment finance programs, financial assistance to the SPVs, lending program for financing creative economy and the finance for grassroots enterprises. What is a line of credit? Exim Bank extends line of credit. Exim Bank extends line of credit to overseas buyers to facilitate the export of Indian goods and services. This encourages foreign nations to source from India and promote economic ties. There is special emphasis on extending the line of credit as an effective market entry tool as well as a means of market diversification for Indian exporters. It also helps in enhancing export opportunities for India and driving the economic growth of the nation. They encourage the economic growth of the nation as they encourage and facilitate conditions for Indian companies to invest abroad, that is, overseas investment finance, for seeking resources, the markets, new markets, efficiencies, and the strategic assets. What are the project exports? It has been one of the prime drivers in encouraging project exports from India and has enabled Indian companies to secure contracts across various geographies over the past 3 decades and supplement the development opportunities or objectives of host countries. What is a NEIA? It is a National Export Insurance Account. The Export Import Bank of India's buyers credit under the NEIA. This product support Indian exporters by offering competitive credit terms to foreign buyers, making Indian goods and services more attractive in the global market. So, what are the other services that are being provided by the Exim Bank? There are various services that are being provided by the Exim Bank. That is including the consultancy and technology services, overseas investment finance, import loans, export marketing fund, product liability insurance, and export vendor development lending program, as well as the line of credit program for the other countries. Now let's go into each and every topic on a brief note. Consultancy and technology services. Exim Bank offers consultancy services to Indian entities looking to expand their international presence. This includes providing expert advice on market research, strategy formulation, and regulatory compliance in the foreign markets. What is the overseas investment finance that is being provided? It supports Indian companies looking to invest abroad. It provides financial assistance to Indian entities undertaking foreign direct investments in various sectors, helping them establish a presence in the international markets. How do they help? By import loans? It extends import loans to Indian companies, allowing them to finance the import transactions. These loans provide the necessary funds for businesses to procure goods and services from overseas suppliers. Export Marketing Fund or the EMF is designed to assist Indian exporters in marketing efforts abroad. It may cover expenses related to promotional activities, participation in international trade fairs and exhibitions, and other marketing initiatives aimed at expanding their global reach. What is a product liability insurance? The Exim Bank offers this type of insurance to protect Indian exporters against legal liabilities arising from defects or issues related to the exported products. This insurance provides a safety net for business in, in the cases of unforeseen circumstances. How do it help in the export vendor development lending program? This program has been designed to support Indian manufacturers and service providers in developing their various base for export-oriented production. The bank extends financial assistance to help businesses enhance their production capabilities and meet international quality standards. The line of credit program that has been extended to other countries. This is the Exim Bank line of credit program is a crucial tool to India's diplomatic and economic engagement with the other banks. Under this program, the Exim Bank extends line of credit to foreign governments and agencies for financing development projects. Here are some of the key aspects of this program. The long-term financing. The line of credit program typically offers concessional long-term financing for development projects. This allows recipient countries to undertake projects that might otherwise be financially challenging. The sectoral focus. This program covers a wide range of sectors, including the infrastructure, transportation, energy, agriculture, education, healthcare, and more. This ensures that the funding addresses the diverse development need of the recipient countries. Collaboration and the capacity building. What does this mean? Through this program, the Exim Bank not only provides financial support but also collaborates with the countries to build the local capacity for project execution and management. They do go for bilateral agreements also. The LOC agreements are signed between the Government of India and the respective government of the recipient countries. These agreements outline the terms and conditions of the credit facilities that are to be forwarded or the credit facility that are being provided, facilitating trade and economic ties by supporting development projects in recipient countries. India strengthens its economic and diplomatic ties with those nations. It also promotes Indian goods, services, and expertise in the international markets. By the SDGs, Sustainable Development Goals, the line of credit program aligns with the United Nations SDG, the Sustainable Development Goal, contributing to poverty alleviation, infrastructure development, and overall socio-economic progress in the recipient countries. So, on concluding this, the Exim Bank's line of credit program, is a testament to India's commitment to global development and cooperation. Through this initiative, India extends a helping hand to nations in need, fostering mutual growth and prosperity. Coming to the next topic, we are going for a topic on the Reserve Bank of India. On the Reserve Bank of India, we are going to have a look on the role and the exchange control in foreign trade. The Reserve Bank of India plays a crucial role in managing and regulating the foreign exchange market in India. Its role in foreign exchange encompasses various functions and responsibilities, like it being the custodian of foreign exchange reserve, which is one of the primary roles of RBI. That is to act as a custodian of India's foreign exchange reserves. These reserves include foreign currencies, gold, the SDRs, and other international monetary assets. These reserves are held to ensure stability in exchange rates and to meet any external payment obligations in the future. It also takes care of the exchange rate management and the formulation of the foreign exchange policy. In consultation with the Government of India, it formulates and implements policies related to the foreign exchange transactions. This includes setting up regulations and guidelines for various aspects of the international trade and payments, regulation of foreign exchange transactions, and the licensing and authorization. RBI regulates and supervises all foreign exchange transactions in India. This includes both the current account transactions, that is related to goods and services, and the capital account transactions, that is related to the investment and financial assets, and also licensing and authorization. RBI grants license and authorizes to entities like the banks and the financial institutions to conduct foreign exchange transactions. It sets the guidelines and requirements. RBI grants licenses and authorizations to entities like banks and financial institutions to conduct foreign exchange transactions. It sets the guidelines and requirements for these entities to ensure compliance with the foreign exchange regulations. How does it monitor the ECBs? RBI regulates and monitors the external control commercial borrowings by the Indian entities. It sets guidelines on terms and conditions for borrowing from foreign sources to ensure stability in the India's external debt position. It manages the capital flow and intervenes in the forex market. RBI manages the capital flow into and out of the country to maintain stability in the balance of payments. It may impose restrictions to provide incentives to regulate the flow of the foreign capital. It also conducts interventions in the foreign exchange market to stabilize the exchange market. It may buy or sell foreign exchange currencies to influence the value of the Indian national rupee. By maintaining foreign exchange reserves adequate, RBI ensures that India's foreign exchange reserves remain at adequate levels to meet any external payment obligations, to stabilize the currency, and to maintain confidence in the Indian financial system. So, this is the role that RBI plays in the exchange control of the foreign trade. So, RBI plays a main role, but RBI plays all these roles on the base of the Foreign Exchange Management Act of India. So, our next topic is the Foreign Exchange Management Act. So, what is the main objective, or why was this act introduced? Foreign exchange transactions were regulated by the Foreign Exchange Regulation Act, that is the FERA 1973. Following the liberalization that was ushered in 1991, there were few amendments that were to be made to the FERA in 1993, and a lot of demand to bring certain major changes in FERA in the light of the economic changes that took place. Consecutively, a new act was formed to replace FERA, known as the Foreign Exchange Management Act of 1999. It was enacted and brought into force with effect from 1st June 2000 and applicable to all transactions in foreign exchange undertaken in India or by persons who are resident in India. It was introduced to facilitate external trade and payments and to promote orderly development and the maintenance of foreign exchange in India. It aims to liberalize foreign exchange transactions while simultaneously safeguarding the country's economic stability. The RBI has been delegated powers under the FEMA, as discussed earlier, to issue guidelines, call for reports, data, and also to impose penalties for various violations of the provisions of FEMA for not complying with the directions. A detailed video on the FEMA Act, the Foreign Exchange Management Act, has been uploaded on our channel, and the link for the same is keyed in the description. So kindly visit the video for a complete knowledge on the FEMA Act. Now we will be moving on to the role of the FEDAI, the Foreign Exchange Dealers Association of India, and the FEDAI rules. The Foreign Exchange Dealers Association of India. So what is the role of a FEDAI? Initially, let's have a small introduction about them. The FEDAI plays a significant role in facilitating and regulating the foreign exchange transactions in India. It is an industry body established in 1958 that represents the authorized dealers in the foreign exchange market. FEDAI formulates rules and guidelines that govern the foreign exchange transactions in India, of which here are some of the rules of FEDAI. Its standardization of practices standardizes all practices in the foreign exchange dealing. Like FEDAI standardizes and streamlines practices and procedures in foreign exchange market, which helps in maintaining the consistency and clarity in the transactions. It promotes professionalism and ethical conduct among its members or the member banks and the dealers. It sets high standards of conduct to ensure integrity in the foreign exchange dealing. It's the main it's one of the main role is setting exchange rates. It provides a platform for members banks to fix exchange rates for various currencies. These rates are used as a reference for market participants for their transactions. Guidelines for foreign exchange transactions. FEDAI issues guidelines and rules that govern various aspects of foreign exchange transactions, including the documentation, risk management, and compliance with the regulatory requirements. FEDAI formulates guidelines for managing foreign exchange risk. This includes the provisioning of hedging strategies and risk mitigation techniques for businesses and the financial institutions. It also conducts training programs, seminars, and workshops to enhance the knowledge and skill of professionals working in the foreign exchange market. The FEDAI also disseminates information related to foreign exchange markets, regulations, and the best practices to its members, helping them stay with the industry trends and the regulatory changes. So this is what we know about the role of FEDAI. It helps in standardization of practices, promotes professionalism, it helps in setting up of the exchange rates, it gives the guidelines for all foreign exchange transactions, it helps in the risk management and also gives the guidelines for hedging to get the help of the risk management. It also provides training facilities and training programs and skill development programs. It also disseminates information that related to the foreign exchange markets to help all traders stay updated with the industry trends and the regulatory changes. Next, we go through the topic, the FEDAI rules. What are these FEDAI rules? The FEDAI rules are mainly on the quoting of exchange rate, the guidelines for derivative transactions, documentation and reporting requirements of the dealers, the code of conduct, what are the market practices, and compliance with the regulatory requirements. Coming to the main point, quoting of exchange rates. FEDAI sets guidelines for member banks on how they should quote exchange rates. This includes the spread between the buying and selling rates and the process for determining the rates. Guidelines for the derivative transactions. FEDAI provides rules for transacting or trading in foreign exchange derivatives, including the forwards, the swaps, the options, and the futures. These rules help in managing risk associated with the currency fluctuations. Documentation and reporting requirements. FEDAI sets standards for documentation of exchange transactions and reporting requirements. This ensures transparency and compliance with the regulatory norms. What are the code of conduct? FEDAI enforces a code of conduct for member banks and dealers. This code outlines ethical practices, compliance with regulations, and adherence to professional standards. What are the market practices and the rules on market practices given by FEDAI? It establishes market practices that govern various aspects of foreign exchange transactions, including the settlement or the settlement procedures, dealing room operations, and the risk management of the market. And compliance with regulatory control, it ensures that its member banks comply with all the regulatory requirements that have been set forth by the RBI and the other relevant authorities on foreign exchange transactions. That is, all regulatory requirements given by the RBI or as mentioned in the FEMA or by the SEBI Act, all are to be adhered with. Now, thank you for joining us on this insightful journey through the integral players in India's foreign trade landscape. The Exim Bank, the Reserve Bank of India, the introduction of the FEMA or the Foreign Exchange Management Act, and the FEDAI. Together, they form the bedrock of our nation's international financial operations, ensuring stability, growth, and prosperity. As we navigate the dynamic world of the global commerce, their roles become even more crucial. From Exim Bank support to exporters and importers, to RBI's vigilant oversight, FEMA's regulatory framework, and financial standardization of practices. Each entity plays a vital role. Any questions or queries regarding this video or this session may please be updated in the comment section, and we will be happy to reply to your comments. Do not forget to like, share, and subscribe our channel to your friends. This is Nishant signing off. Jai Hind.